Well, the March stats are in, and I wanted to go through them in detail, share a live update on what the data is saying, and then go into more detail on my interpretation and my prediction moving forward. So let's hop into it. Although, before we get right into the raw data, I do want to share with you that the numbers that I'm going to go through will seem sort of scary or alarming, and that is because we are comparing the March 2023 data. March 2022 was the top of the hyper COVID market. That is when, as a seller, you wanted to sell. I can say that now because enough time has passed where we can tell when there's been a sort of a top, like the top of the mountain or the bottom of the valley. So the data that I'm going to share with you will seem scary and alarming, but be sure to stay to the end where I'm going to share what my predictions are moving forward, and it's not as bad as it may look. So to hop right into it, sales are down 40% compared to March of 2022. So that's in terms of total units sold is down by over 40%. The average sale price in March of 2023 was $710,000, $70,000. The average sale price in March was over $850,000. So a big discrepancy from where things were, but there is some light at the end of the tunnel as we move forward. So this is our March Ottawa Real Estate Board data that was just sent out. So when we look at units sold for the month of March, it's coming in at 1,194. So about 1,200 units is what sold in the month of March. This breaks out for us what 2022, 2021, 2020, and 2019. So you'll see that the numbers are coming down. We are still down much further. We're down by about 300 units from where we were back in 2019 and 2020. So there's no surprise that, this time last year was higher, and then 2 years ago, it was even higher, but right now we're at 1,200 units sold for the month of March. So as we start to look at the actual sale price, the average sale price for the month of March was $710,000. This is down 17% from 2022. So as I mentioned at the beginning, the average sale price back in March of 2022 was over $850,000. Now in the month of March 2023, so 12 months later, the average sale price is $710,000 for the residential class. So I'm not talking about condominium or multifamily or farm or lot, just strictly residential. The light at the end of the tunnel is we are seeing a 0.2% increase in the sale price from March to February. So prices are slowly starting to come up from February, which is not uncommon, but with a lot of this doom and gloom that you're probably hearing in the marketplace and the media is pushing out saying that market's down, panic city. Yes, no, not at all. It's just because we're comparing it to when we were at the top hyper COVID market back a year ago. So let's get more granular into the data. This right here is the units sold. So as shared, we're down by 40%. Right here, 39.9%. When we look at all of the type of residential classes, condominium is down by 41%. Average sale price, $710,000 for the month of March 2023. And then when we look at March of 2022, the average sale price was $854,000. So about a 17% decrease in average price. Where I like to really kind of dive in and look at closer is our average days on market. I spend most of my time working directly with sellers and helping the market to net them the most amount of money in the given market. And one of the key indicators that I use in guiding sellers is our average days on market. So how long typically on average is it taking a property to sell? So I'm always eager to see what is our average days on market per month. So this is 34 days for the month of March 2023. Back in 2022, so a year ago, property was selling in 11 days. So it was just like flying off the shelf. And that's when we were seeing a lot of these multiple offers, holding off on offers, crazy bidding wars. There is still a little bit of that happening, but not nearly as much as what we were seeing in the past. So our average days on market right now for March 2023 is 34 days on market for residential class. Interesting to highlight was the actual price range that was seeing a lot of activity. And we are seeing right now between $400,000 and $600,000. There is a 70 to 100% increase in activity between $400,000 and $600,000. really to no surprise, right? With higher interest rates, cost of borrowing is a lot more. People aren't able to afford as much of the larger 700 to, you know, 2 million. So that whole asset class is down. Look at this: 18%, 60%, 68%, 57, 69, 75, 81. So the actual price range between four to $600,000 is seeing the most amount of activity right now, with a 70% increase for the 4 to 500 and 100% increase between the $500,000 and $600,000 range. So that is the raw data we're seeing. Welcome anyone that would like more specific one insight into that. I'd be happy to go into it. What does this mean for us moving forward in the market? And what is my interpretation on this data? Well, to no surprise, we are seeing such a gap between where it was in March of 2022 to where it is now in March of 2023, a 40% difference. And this is to be expected because March 2022 is when we're at that top of the market. Now, what I predict is in April, that's when prices, April 2022, when prices started to come down, and inventory and the amount of units sold started to come down. So that gap will start to shrink. So as we lead into April, May, June, and into the summer, the news is not going to be as scary, which will then create more consumer confidence, which will then open up this bottleneck. I can share with you right now, live in the trenches, there is a ton of activity happening. Not as much deal flow as we've seen in the past, but there is a lot of active interest that buyers have in properties. We've had multiple open houses over the last few weeks into March. And just herds of people coming through, dozens and dozens of people coming through these open houses and interested in exploring and seeing where prices are and understanding where the market is today and where it is headed. So my prediction, as we head into April, May, and June, this bottleneck is going to open up. A typical real estate spring market is usually 60 days ahead of a seasonal market. So if we look at a seasonal spring market, when the snow starts to melt, the days are longer, grass starts to come out and turn green, birds are out chirping, all these fun things that we look forward to in the spring, that is usually happening sort of March, April, May. A real estate market is typically 60 days before that, so that would be sort of February, March. What's happening this year is our real estate market is actually probably going to be about 60 days after our seasonal market. So when we think March, April as our seasonal spring market, I predict that we are going to see our real estate spring market in sort of April, May, and as we lead into June. That is when consumer confidence will be added back in. Interest rates, we aren't expecting them to go up anymore. The Bank of Canada freezing and not doing a rate hike over the last 2 months after 8 consecutive other increase in interest rates. So we are predicting that this leveling and with inflation coming down, that there will be renewed confidence in the market. The other thing is sellers are now starting to be more accepting to where the market is. See, as time passes, more data comes out. That's what this whole market update is about, reviewing and interpreting the data. As more data is coming out, it will be available for sellers to see. So sellers are no longer having to be that guinea pig and putting their property on the market at such a low price compared to maybe where their neighbor was and be upset and disappointed and distracted. They can say, well, based upon the last 6 months or so, these are the price points that properties are selling for. Yes, it's not where it was a year ago, but if the market was where it was a year ago, these 6 properties would have sold consistently higher. So sellers are being more accepting of where the market is today and realistic versus where they were 6 or 9 months ago when we just had no foundation. We didn't know where we were going. We couldn't find that bottom. So I'm predicting that things will start to loosen up and open up as we lead into April, May, June. I certainly welcome any feedback, any comments, any questions you might have. Feel free to reach out to me. Be happy to share my advice and perspective on what I'm seeing in your specific area. So one thing I would leave with you is when you're hearing some of the market data that is being shared, it might seem scary and doom and gloom. Recognize that Ottawa is made up of multiple micro neighborhoods. When we look at raw data that you're probably hearing in the news, it's talking about all of Ottawa. So make sure you're being realistic and sensitive to the data that you're consuming specific to your neighborhood and not being overly consumed with just the macro percentage decrease that you're hearing. Ottawa is made up of multiple micro neighborhoods and communities, and be sure that you're comparing apple to apple. If you have any questions, you're curious about what's happening with the market, you're either a buyer or a seller, please reach out. I would be more than happy to provide my advice and perspective that I'm seeing in the marketplace and parallel that with your unique situation. Thank you. I look forward to hearing from you.
liamswords.com